Welcome back. Chris Gosselin from Australian Fund Monitors. Today, we had the Reserve Bank make the decision or the announcement that there would be a 25 basis point rate cut. I'm joined again by Nick Chaplin and Renny Ellis, who are becoming our regular and resident experts on all things interest rates and Reserve Bank. Welcome, gentlemen, Nick and Renny. What's your view? Who wants to go first about whether this was the right decision or the wrong decision? Or maybe the right decision, but 5 or 6 weeks too late?
As I think both of us, well, I certainly suggested the other day that we both suggested that she shouldn't drop rates. There was no real impetus or catalyst to do that. In fact, I think one of the points I brought up the other day was I thought she'd reached a point of neutrality with the dual aims of the RBA on unemployment and inflation management. But I think there was a bit of caving to political pressure, to media pressure. This time we went from a 6-3 vote to a 9-0 vote. I wasn't convinced at all that much had changed since July, other than we'd had two key pieces of information come out. One was unemployment moving to 4.3 from 4.1, and the other one was a CPI outcome that was lower than anticipated. And so, if anything, that probably gave them the safety to cave into the pressure. Now, I don't have Michelle Bullock in the room. It's a bit unfair of me to say she's caved, but I just feel that's what's happened. We said the other day that she shouldn't move. I think we also said they probably will because of the amount of pressure, Chris, that was mounted on them by particularly the media. And again, interestingly, that some of the questions in the aftermath interview were, well, house prices will now go up, won't they, Governor? What do you think of that? And I think the point that she made at the very end of the July 8 conference was, we can't win. If we put rates up or hold them, the outcome is not going to be good. So she has to be careful now, because if she's definitely suggesting there's an easing bias now with potentially up to 2 more, but she hedged her bets there by suggesting things can change very carefully. I thought there was a little bit too much focus on the US and the potential for the US to influence things globally, at least here, as much as anywhere else. Given we're in a completely different scenario, we're not a victim of tariffs to the same extent as perhaps some other countries, so that prices rising here influenced by tariffs is less of an impact than it would be certainly in the US. So wash up from mine is it is unsurprising given the pressure from the Treasurer, no doubt, other parties within the board of the RBA themselves, given that some of them are external, and the media. But she needs to be careful. Dry powder for the future, I suspect.
Well, as you say, it was 9-0. So if pressure got to Michelle Bullock, it got to everyone else as well. Renny, what's your view? You might have a slightly different take on it.
Yeah, we just go to that 9-0 business. That a little bit of game theory in a board like this. They if the power shifts, then often there's a lot of everyone goes at once. No one wants to be then saying, "Oh, we were still holding out," because they were definitely going to get a rate cut. So last time there were 3 definitely looking for a rate cut, and the balance weren't. If the power had shifted early on in the meeting, then I could see them all going at once. So I'm not sure that they didn't still have worries and convictions, the other board members, but we'll see. Look, 90-day bank bill swap was at 363 just before the announcement. We won't know where it opens until tomorrow morning. Across the curve since the announcement, it's 5 basis point fall in yields only. So the 2-year, the 10-year is 424, and the 2 years down 5 as well. That's a little odd. You would have thought that the 2-year, when she was talking about another 2 to 3 rate cuts, which I think was a remarkable statement. Certainly at odds in what the economy looks like, and at odds in what was said after the last meeting. So I think that I'm a bit surprised the 2-year didn't move down by more. Maybe we'll see some more action over the next 24 hours. It's only a few hours now. I'm a little worried about her not being able to give any sort of clear indication on where neutral was. She said, "Oh, somewhere between 1 and 4." I mean, my dog could have picked that number. That's not great. We're owed a little bit more than that. Given this rate cut and thinking that inflation will stay permanently at 2.5, which was also said in the meeting in questions, you'd think neutral would be about 3. So that does imply 2 more rate cuts.
Well, maybe even a rate cut of more than 25 bips to satisfy Nick's view that
Chris, just to clarify there, we could go 10 and still get Nick happy that it's a round number.
We could.
There's the other option. We should talk about the 10 too.
I like the 10 idea, and in fact, that could have been done today, just to round it off and satisfy some people at least. At least someone in the press did ask about why not 35. She didn't answer the question. The other point I'd make, Renny, is that the dollar has hardly moved in the news, which means that either there was a widespread expectation that this was going to happen. Mind you, there was last time. I think there might be more of a reaction to the dollar, which is sitting right on 65 cents now, in the next day or so. So, as you say, we might get a better reaction on the...
We've moved a little bit against the yen, though. We're down 13 basis points against the yen. We're not really moved against the US, but against the yen, we're down 13.
Yeah. So I wouldn't be surprised if it happens overnight that we drop into the 64s with the US as well, and then it comes back in the next 2 days. Sorry, Chris.
So I was going to say, sort of moving from the whole economy, what should investors take out of this apart from go and buy property? As Renny said, there's obviously if they're going to drop rates down towards 3%, that's going to be very positive for the property market, depending whether you're a buyer or a seller. But what about the average investor? Should they take comfort from this? Should they be happy about it? Again, it might be dependent on whether they're a borrower or a lender.
I think it'll fuel, as much as I know you said this the other day, that it won't or shouldn't fuel it, Renny, but I think it'll fuel duration speculation again, because she's made a comment around 2 more rate drops, and it's quite surprisingly so. It was something that the banks were happy to speculate about, but to have the RBA governor actually say it was something new. So, there'll be more speculation, I think, about duration play. If anything is out there now, if there's anything left with a 6 on it, people are going to grab that. They'll have to be very careful about how they look at the credit. We've seen some products come out this week that people need to be careful about how they assess them. But otherwise, as we know, floating rate instruments will drop with the 90-day bill rate, and there will be an expectation below 3.6 now.
I was certainly surprised at that, although she left herself plenty of wriggle room based on what the numbers were coming through and what happens in the US. But the last time a Reserve Bank governor made any sort of serious prediction about where rates were going, they weren't going to rise for a long time. It was Philip Lowe, and he got roundly castigated by everyone for that. So I thought she was possibly surprisingly definite about the future direction.
Yeah, more so than perhaps she should have been. I agree.
Yeah. Look, the way I see this playing out is that the dollar will weaken, the yield curve will steepen. The long end of the yield curve is still determined by where the US long end is going, not where RBA policy goes. I'm a bit surprised that we haven't seen 2-year yields drop at more than 5 basis points, and then I'm also surprised that the move across the curve has been a consistent 5 basis points this afternoon. So the duration thing's not playing out yet. I think there's a difficulty here for investors. If if the RBA is seeing something that the rest of us aren't about the economy, well, then credit spreads are very tight, equity prices are very, very high, and that's not what they want to hear. The investors in those areas, there's risks they don't appreciate. So maybe that comes out of this a little bit. Maybe credit spreads will shift a bit back out. Maybe the share market will have to reevaluate its outlook for the economy, because the RBA is telling them that, oh my God, there's two to three more rate cuts coming because things are worse than we thought they were a month ago, even though the data doesn't really show it. I think you've got to be a bit careful from an investor's point of view.
So I hope it doesn't push people into the stock market as easy as that, because there was a question today that was probably inappropriate that was asking her to speculate about the direction of the ASX on the back of moves made by the RBA. And as rates reduce, you typically get a boost in the stocks, and the reverse happens, of course, vice versa. So with her suggesting potentially two more in the scheme of things, if everything stays as it ordinarily is now, that could push people into speculative positions from an equity perspective, which wouldn't be ideal.
The stock exchange level is not part of the RBA mandate. Neither is house prices. They're starting to take economic monetary policy based on what the stock market may or may not do. The stock market's supposed to be a predictive forward indicator of the economy 6 to 9 months ahead. There shouldn't be anything in her thinking on what the stock market should do ever.
She certainly walked away from that. She certainly confirmed that. Can we just change direction a moment and take a look at what's happening in the US and the potential for a rate cut there and the economy there, and more importantly, the potential for inflation there? I read some research over the weekend that, as a rule of thumb, for each 1% in tariffs, that could lead to, as a rule of thumb, 0.1% increase in inflation. So this piece of work was basically saying, it came from Jonathan Payne, who I respect. He was saying that inflation in the US by the end of the year could be 4%. What would that do to what's happening in the US?
No, I was just saying I think it's quite feasible, that 4% number. I think it potentially, and again, Michelle Bullock spoke to this point, suggested the temporary nature of any spike in inflation, even in the US, of tariffs. But it's something that she's well aware of, and the whole board is watching, and that is the extent of a reversal in the direction of inflation based on the trade work that's being done at the moment by the government over there. So I don't think he's incorrect in that assumption.
Yeah, I'd just add that most forwards for September quarter are looking for the core PCE quarterly data, inflation data, which is the one the Federal Reserve watches, to go back up to around 3.4 to 3.6. So that call for 4. Okay, some of these tariff readings have come in actually higher than what we were expecting a month or two ago. And so maybe that's possible. And the tariffs are definitely inflationary. It'd be a question mark then next to us whether they're transitory or not. But they're definitely inflationary in the short term. What concerns me a little bit more about the tariffs and the way that policy is being enacted is that it's disrupting the supply chains, and just that disruption may cause inflation. There's shipping not knowing where it's going to go, being turned around at sea, buyers in the United States and all over the world don't know what to do because the policy keeps changing every 5 minutes. Actually, almost every 5 minutes is actually very true.
It all depends which way Trump is looking at the time, is it not?
Yeah, I mean, that overnight, this deal on with AMD and Nvidia that they're going to pay the government 15% sales tax effectively, so on all their Chinese exports to China. I mean, that's a remarkable outcome. They've basically been blackmailed into paying a tax so that they can continue to do business with China.
Well,
Strange
yeah,
world we're living in.
I think that's absolutely true, and it's a strange world in which we live. Can I leave it there unless, Nick, you have any last word on the whole debate?
No, I think we've covered it very well, Chris, and we've even managed to get in on a view on the tariffs in the US. So I think we've gone the full gamut.
Nick Chaplin, Renny Ellis, thank you very much indeed.
Thank you, Chris.
Next
Thanks,
time,
Nick.
I think the next meeting is the end of September. We shall look forward to speaking to you before then.